One of the leading questions that I often receive is how to qualify for a business loan with no active revenue. And the answer can be quite simple as long as you have all of your business affairs in order. However, there's a few things that I want you to take into consideration when it comes to securing funding for your business, and that's what we're going to discuss in today's video. Welcome back. I'm Zane and you're watching Minding Your Business, where what we focus on grows. And of course, before we get started, be sure to like this video if you find any value from today's content, and consider subscribing and turning on your bell notifications to be alerted of future videos. Also, be sure to share this video with someone who you think can benefit from it, because it seems like there's a lot of videos across YouTube on business loans that you can qualify for, but there's not enough information sharing how to actually qualify for these loans, especially from someone who has seen the vetting process firsthand by lenders. After all, the more we know, the stronger we can grow. Now, according to the Small Business Administration, there are over 600,000 new businesses that open each year here in the United States. Small businesses are the backbone of the U.S. economy, and according to the U.S. Bureau of Labor Statistics, 20% of U.S. businesses fail within the first year, mainly due to the lack of capital. Though I stand by, the root of failing businesses, to include nonprofits, is really due to the lack of planning. But that's for another day. However, the most common problems that many entrepreneurs face while starting a new business is accessing funding, and particularly with getting approved for a business loan. And accessing funding is different for everyone. As mentioned from my previous video on the top 7 money tips every entrepreneur should know, if you haven't already watched it, I highly recommend checking it out. However, I mentioned that accessing bank funding as a minority-owned business can be quite challenging than one of a white-owned business. And as someone who used to be an advisor that worked alongside with the SBA, it is a known fact that minority-owned businesses have a higher disapproval rating than our counterparts, which stems from a combination of factors, to include but certainly not limited to not having a strong relationship with the banks, having a poor credit history, or not having the appropriate documentation to support the business. Like, even when you have dotted your I's and crossed your T's, generally when a minority-owned business is approved for a business loan, in most cases, not all, they will receive less money and will pay for it with higher interest rates. Like, I hate to share this truth out loud, but business loans weren't really designed to help further minority-owned businesses. I believe you already knew that. This is why I have always stressed the importance of establishing our own funding, while also recommending business grants and crowdfunding options beforehand. These systematic barriers are a part of why I developed my company Beast Elite, because I understand the challenges that we go through as minority-owned business owners. But while we're on the topic of qualifying for a business loan or general funding with no active revenue, remember this quote: you have to secure your foundation before you secure your bag, because if you don't, then your bag would never be properly secured, and that's a fact. So, first things first, when it comes to qualifying for a business loan, you need to make sure you have your organizing documents in place. Lenders will want to make sure that you are recognized as a legal entity with proof of your articles, to include your EIN, which is your employer identification number. While sole proprietors are eligible for business loans, in most cases it will be more difficult to get approved because lenders often categorize sole proprietors as high risk. Nevertheless, if you are operating as a sole proprietor, you need to show proof of your company name, address, and EIN filed with the IRS. Secondly, you will want to make sure that your company is in good standing. This is something that I stress a lot with small business owners, and is a part of your annual compliance of maintaining your legal status. Being in good standing means that you are able to legally operate as a business, and without it, you won't be able to move forward. Now, if you're unfamiliar with this information, I highly suggest checking out my online course on how to activate and manage your LLC, which will be found below in the description box, because it is vital to make sure that we have everything in place from owning, operating, and maintaining our businesses successfully, especially given the survival rate of small businesses here in the United States. So I strongly encourage you to check that out. Thirdly, you will want to make sure that you have a good personal credit score rating. And when I say good, your credit score has to be at least at a 700 or above, depending on the requested loan amount. Now, based on my experiences with the SBA, when qualifying for a business loan with no active revenue and having a lower credit score, you must have a strong repayment plan detailed within your business plan to support your loan amount and a great rapport with the lender. But in most cases, not having a decent credit score will get your loan application rejected. Fourthly, your business plan. Your business plan is extremely important when it comes to requesting a loan or any kind of funding. While your entire plan will be reviewed in great detail, the most important sections that lenders focus on first includes your executive summary. Your executive summary is to summarize your entire plan and is the first page that lenders will see. So make sure that it's very compelling. Now, within your executive summary, I recommend highlighting the key takeaways that captures what makes your business so unique to include your company description, its inspiration, as well as the need for your products and or services. Also, I recommend highlighting your biggest competitors and explaining how you will compete in the market. And within the same section, you can mention a little bit about your projected profit within the first 3 years, but I don't suggest going into much detail here. Remember, your executive summary is just that, a summary, and should fit to one page. Now, the next section that lenders will focus a lot of their attention on includes your company description. Your company description or your company overview should go into more detail from your executive summary. While your executive summary will be the first page investors see, your company description is the first section that explains what your company is all about. Next is your market analysis. Your market analysis should not only describe your industry, its trends, your target market, competitors, and the gaps that you're fulfilling within a marketplace, but it should also go into detail about your targeted customers as well. You need to describe who are you targeting, what do they look like, what is their age range, and where do they shop. This is the kind of information that lenders want to know to see if you have a viable business that will survive into the future. And with your market analysis, you need to carefully detail your marketing and sales plan. When it comes to requesting money that you have to pay back, it's important to highlight how you plan to repay that money back with how you plan to retain customers and generate sales. And next is your management structure. Your management structure is to show how your business will be organized. Who is all involved? Do you have any partners, advisors, board members, or key employees? If so, what are their roles and responsibilities within your business? This is something that should be mentioned along with their qualifications to showcase the value that they are contributing in your company. And finally, your financial plan. Your financial plan will be the key focus and determining factor based on your loan approval. Again, lenders will want to ensure that your business will be in a position to repay the loan back without any hesitation. Within the financial section, you should detail your projected sales within the first 3 to 5 years, along with your expenses of what it will cost to operate your business successfully while showing a profit. Now, keep in mind that your financial plan should reflect your marketing and sales strategy as well. So while you are making projections, it needs to be as accurate as possible while supporting your plan on building your customer base and generating sales. Also, you should mention the requested loan amount, what it would be used for, or how it will be spent, along with how it will be paid back. Again, while your business plan will be reviewed in its entirety, these are the main driving factors lenders will review while determining if your business will be approved to lend money. And for additional guidance with developing a sound plan that will challenge your thought process, yet is simplified with the needed tools, strategies, and resources to successfully position your business forward, especially with meeting the standard of potential lenders or partners, check out our business plan templates, which I will link below in the description box. And other qualifications to determine your approval may include tax returns, proof of a professional office address, because sometimes home-based businesses are frowned upon, but it doesn't mean that you won't get approved. Also, having a functionable website. By not having a website won't get your application rejected, but lenders will want to see how serious you are with your business. These elements will all be taken into consideration when it comes to securing a business loan without any active revenue. So if you are someone who is in a process of securing a business loan or have been thinking about it, please feel free to leave any questions in the comment section or request a consultation if you need additional assistance. And be sure to stay tuned for part 2, where I will go into further detail on the type of loans you should consider checking out. Also, we will be discussing more on the benefits of business grants and crowdfunding options as well. Until next time, I'm out.